What if everything you've been promised about retirement is a lie? What if the pension fund you've been counting on, the 401k you've been contributing to for decades, the Social Security you've been paying into your entire working life, what if none of it will actually be there when you need it? That's not a hypothetical. That's the reality facing millions of Americans right now. Because here's what nobody is telling you. There's a $12 trillion hole in America's retirement system. That's trillion with a T, and that hole is getting bigger every single day. We're talking about state pension funds that are mathematically guaranteed to fail, private pensions making promises they cannot keep, 401k plans invested in assets that are about to collapse, and a Social Security system that the government itself admits will be insolvent within the next decade. But here's the kicker. While your retirement accounts are being quietly drained by inflation, mismanagement, and broken promises, one asset has been exploding higher. Gold has outperformed nearly every pension fund in America over the last 5 years. The same asset that governments are desperately trying to accumulate. The same asset that billionaires are quietly moving into. The question is, why does gold keep winning while your retirement keeps losing? And more importantly, what can you actually do about it before it's too late? What's up, everyone? I'm the Stat Guy, and today we're pulling back the curtain on the biggest financial scandal nobody's talking about. The $12 trillion pension crisis that's about to devastate millions of Americans, why gold is the ultimate escape hatch, and how you can protect yourself before the system implodes. Let's get into it. Before we dive into the specifics, let me paint you a picture of just how dire this situation really is. The American retirement system is built on 3 legs. Think of it like a 3-legged stool. Leg 1, Social Security. The government program you've been paying into since your first paycheck. The promise that if you work hard and pay your taxes, you'll have a safety net in your golden years. Leg 2, employer pensions and retirement plans. Whether that's a traditional defined benefit pension, a 401k, a 403b for public employees, or any other workplace retirement account. Leg 3, personal savings. Whatever you've managed to put aside on your own. Now here's the problem. Every single leg of that stool is cracking. Let's start with Social Security. According to the Social Security Trustees Report, the Social Security Trust Fund will be depleted by 2033. That's not some conspiracy theory. That's the government's own projection. When that happens, benefits will automatically be cut by 23% across the board. If you're planning to retire in the next 10-15 years, you're looking at getting nearly a quarter less than what you've been promised. And that's the optimistic scenario. Now let's talk about pensions. The American Academy of Actuaries estimates that state and local pension funds are underfunded by at least $4 trillion. Some estimates put that number as high as $8 trillion when you account for unrealistic return assumptions. Private pensions aren't much better. The Pension Benefit Guaranty Corporation, the federal agency that insures private pensions, is itself running a deficit. It's supposed to be the backstop, and the backstop is broke. And then there's 401k plans. The average 401k balance for Americans aged 55, 64 is around $200,000. Sounds okay until you realize that at a 4% withdrawal rate, that's only $8,000 per year. Try living on that. But here's what makes this a crisis instead of just a problem. Inflation. Everything we just talked about, Social Security, pensions, 401k balances, they're all denominated in dollars. And the dollar is losing purchasing power at a rate we haven't seen in 40 years. Even if your pension fund doesn't collapse, even if Social Security somehow survives, even if your 401k doesn't crash, the dollars you receive will buy less and less every single year. This is the silent theft that nobody talks about. Your retirement isn't just at risk from fund failures. It's being eroded every single day by the Federal Reserve's money printer. Now, let me break down exactly where this $12 trillion number comes from, because it's actually worse than most people realize. First, we have state and local government pensions. These are the retirement funds for teachers, firefighters, police officers, government workers, the people who were promised secure retirements in exchange for lower wages during their working years. Total underfunding, at least $4.4 trillion according to the Hoover Institution. Some estimates put it closer to $6 trillion. Let me give you some specific examples that will make your jaw drop. Illinois' pension system is only 37% funded. That means for every dollar they've promised to retirees, they only have 37 cents. The state would need over $300 billion to fully fund its pensions. Illinois' entire annual budget is only $50 billion. New Jersey is 38% funded. Kentucky is 33% funded. Connecticut is 52% funded. These aren't small states. These are millions of workers who have been promised retirements that mathematically cannot be paid. California's CalPERS, the largest public pension fund in America, is only 72% funded, despite managing over $450 billion. They need nearly $200 billion more just to break even on their current promises. Second, we have private pensions. Companies like General Electric, Boeing, Lockheed Martin, and hundreds of others have legacy pension obligations they can't fully meet. The total underfunding in private pensions exceeds $700 billion. And here's the scary part. When private pensions fail, they get handed off to the Pension Benefit Guaranty Corporation. But the PBGC itself has a $17 billion deficit. The insurance backstop needs insurance. Third, we have the 401k crisis that nobody's counting. Americans have about $7.7 trillion in 401k plans. Sounds like a lot until you realize the average balance is woefully inadequate for retirement. Most people don't contribute enough. Most people don't start early enough. And the fees? Oh, the fees eat away at returns year after year. But the real 401k crisis is what those funds are invested in. Most 401k plans are heavily weighted towards stocks and bonds. The same stocks that are at all-time high valuations. The same bonds that lose value when interest rates rise. The same financial assets that get destroyed in every major economic crisis. When the next market crash comes, and it will come, 401k balances will be decimated overnight. We saw it in 2000. We saw it in 2008. And we'll see it again. Fourth, we have Social Security. The Social Security Trust Fund shortfall is projected at approximately $22 trillion over the next 75 years. Even in the near term, we're talking about $2 to $3 trillion needed just to get through the next decade without cuts. Add it all up. State pensions, private pensions, 401k inadequacy, Social Security shortfall. You get a number that's not 12 trillion, it's closer to 30 trillion. I use $12 trillion because that's the most conservative estimate of the immediate crisis. The money that should be there right now, today, but isn't. 12 trillion. Gone. Missing. Never funded. Promised, but not delivered. And every single day that passes, that hole gets deeper. Now, before I go further, I want to talk about the mechanism that's making all of this worse. The hidden theft that is happening to every retirement account in America, regardless of whether the fund is well managed or not. I'm talking about inflation. See, here's what most people don't understand. Your pension fund could perform perfectly. Your 401k could hit its target returns. Social Security could somehow avoid cuts. And you could still end up broke, because it's not just about the number of dollars in your account. It's about what those dollars can actually buy. Now, let me give you an example. In 1990, remember when a gallon of milk cost about $2.15? Well, today it's over $4. That's a staggering 86% increase. Let's talk about housing. In 1990, the median home price was around $79,000. Today, it's shot up to over $400,000. That's a 400% jump. And what about cars? A new car in 1990 would set you back about $15,000. Now, the average is over $48,000. That's a 220% increase. Now, take a moment and ask yourself this. Has your retirement account grown by 400%, by 220%, or even by 86%? For most hardworking Americans, the honest answer is no. And what that really means is that you're falling behind year after year, even if you think you're saving. But here's where things get really sinister. The government tells us about inflation using something called the Consumer Price Index, or the CPI. The problem is, the CPI is manipulated to show a much lower inflation rate than what we actually experience in our daily lives. They use tricks like hedonic adjustments. This basically means if a new phone is 10% more expensive but has a slightly better camera, they don't count the full price increase. They also use substitution. So if steak gets too expensive and people start buying more chicken, the government's numbers don't fully reflect that steak is now a luxury. Some economists calculate that if we measured inflation the same way we did back in 1980, the real rate would be closer to 12 or 15% a year, not the 3 or 4% the government is telling us. So what does this mean for your retirement? It's huge. It means even a successful pension fund earning 7% a year is actually losing purchasing power if real inflation is at 10%. It means your Social Security cost of living adjustments are a joke, leaving you further and further behind each year. It means the dollars you've saved in your 401k are melting like ice cubes on a hot summer day. This is the silent killer of your savings. It's a hidden theft. It's the system that quietly transfers wealth from savers to debtors, from hardworking people like you to Wall Street. And this has been going on for over 50 years, ever since we were taken off the gold standard, giving the Federal Reserve the unlimited power to print money out of thin air. Now, I really want to hear from you. Drop a comment below. How confident are you feeling about your own retirement plan? Do you trust that your pension fund will be there for you when you need it? Let me know your thoughts. I promise I read every single comment. All right, let's keep going because this is where it gets really interesting. So here's the $12 trillion question. If retirement accounts are failing, if inflation is eating away at savings, if the whole system is built on a foundation of broken promises, what actually works? The answer is the same thing that has worked for 5,000 years of human history. Gold. Let me show you the numbers. In the year 2000, gold was trading at about $280 per ounce. Today, it's over $3,000 per ounce. That's a gain of more than 970%. Now let's compare that to pension fund returns. The average public pension fund has earned about 6 to 7% annually over the last 20 years. With compounding, that's roughly a 270% gain. Gold, 970%. Pensions, 270%. Gold hasn't just outperformed, it's crushed the entire retirement industry. But here's what's even more important. Gold's gains aren't just about price appreciation, they're about protection. When the stock market crashed in 2008, pension funds lost 25-30% of their value overnight. Gold? Gold went up. When COVID crashed markets in 2020, 401k balances dropped 30% in a month. Gold? Gold went up. When inflation exploded in 2021, 2022, bonds got destroyed and stocks went sideways. Gold? Gold went up. Do you see the pattern? Gold doesn't just grow wealth, it protects wealth. It's the asset you own for the moments when everything else fails. And here's the crucial difference between gold and retirement accounts. Your pension is a promise. Someone else controls it. Someone else manages it. Someone else decides if you'll actually get paid. Your 401k is a collection of paper assets. Stocks that can crash, bonds that can default, funds that charge fees while delivering mediocre returns. Your Social Security is entirely dependent on future generations of workers, paying into a system that is mathematically doomed. But physical gold? Physical gold in your possession? That's not a promise. That's ownership. Real, tangible ownership of an asset that has maintained purchasing power across centuries, across empires, across every currency collapse in human history. If you don't hold it, you don't own it. Your pension fund might promise you gold-plated retirement, but promises get broken. Just ask the workers at Enron, ask the employees of Lehman Brothers, ask the steel workers and auto workers who were promised lifetime benefits and got pennies on the dollar. Gold doesn't make promises. Gold delivers. Now, let me prove to you that pension collapses aren't theoretical. They've happened before, they're happening now, and they'll happen again. Let's start with the private sector. Remember Enron, the energy company that was once the 7th largest corporation in America? When Enron collapsed in 2001, it wasn't just shareholders who got wiped out. Employees had their 401k plans loaded with Enron stock, which was encouraged by the company. When the stock went to zero, so did their retirement savings. 20,000 employees lost over $2 billion in retirement savings overnight. People who were months away from retirement suddenly had nothing. But Enron wasn't unique. When Lehman Brothers collapsed in 2008, employees lost billions in retirement savings tied to company stock. When General Motors went bankrupt, retirees saw their pension benefits slashed. When Hostess went under, workers who had taken reduced wages in exchange for pension promises were left with nothing. The pattern is always the same. Companies make promises. Employees believe them. And when the company fails, the workers get nothing, while executives walk away with millions. Now let's talk about public pensions, because if you think the government is more trustworthy, you haven't been paying attention. Detroit. 2013, the city of Detroit declared bankruptcy, the largest municipal bankruptcy in American history. And guess who took the biggest hit? Retirees. Detroit's pension payments were cut by 4.5%. Sounds small until you realize these are people on fixed incomes, people who worked their entire careers for the city, people who were counting on every dollar. But the cuts didn't stop there. Cost of living adjustments were eliminated, healthcare benefits were slashed. People who had planned their entire retirement around specific promises saw those promises broken by a bankruptcy judge. Central Falls, Rhode Island, 2011. When this small city went bankrupt, pension benefits were cut by as much as 55%, not 5%. Not 10%, 55%. Imagine spending your whole career as a police officer or firefighter, protecting your community, counting down to retirement. Then one day you're told, sorry, that pension you were promised, you're only getting half. That's not a hypothetical. That's what happened. And here's what the mainstream media won't tell you. These are just the visible failures, the ones that made headlines. There are hundreds of pension funds across America right now that are on the same path. They're making promises they can't keep. They're using accounting tricks to hide the shortfall. And eventually, mathematically, inevitably, they will fail. It's not a question of if, it's a question of when. And when it happens, the people who suffer won't be the politicians who made the promises or the fund managers who collected their fees. It'll be ordinary workers who did everything right and got betrayed. Now let me tell you why this crisis is about to accelerate in ways most people are not prepared for. There are 3 factors converging right now that are going to turn this slow-motion disaster into an acute crisis. Factor 1, demographics. The baby boom generation is retiring at a rate of 10,000 people per day. That's 10,000 new retirees entering the system every single day, expecting to collect benefits they were promised. At the same time, birth rates have collapsed. There are fewer workers paying into Social Security and pension systems relative to the number of retirees collecting. This is basic math. More people taking out, fewer people paying in. The system cannot survive. Factor 2, interest rates. Pension funds rely on investment returns to meet their obligations. For decades, they've assumed 7 to 8% annual returns in their projections. But with bonds paying 4 to 5% and stock market valuations at historic highs, where are those returns going to come from? When interest rates were near zero, pension funds took on more risk, buying riskier assets to try to hit their targets. Now that rates have risen, those risky assets are blowing up. Private equity investments are getting marked down. Real estate holdings are collapsing in value. The alternative investments that were supposed to save these funds are becoming anchors, dragging them down. Factor 3, the everything bubble. Here's what pension fund managers don't want you to know. A huge percentage of pension assets are invested in stocks and bonds that are at historic bubble valuations. The S&P 500 is trading at price-to-earnings ratios that have only been exceeded twice in history, 1929 and 2000. We all know what happened after 1929 and 2000, when, not if, this bubble pops, pension fund balances will be devastated. The funds that are currently 70% funded will become 50% funded overnight. The funds that are 50% funded will become insolvent, and there's nothing you can do about it because you don't control those investments. Some fund manager in an office tower decides where your retirement money goes. And those fund managers are all making the same bets, all buying the same overpriced assets, all hoping they can retire before the whole thing collapses. This is why I stack. I don't trust politicians to keep their Social Security promises. I don't trust pension fund managers to protect my retirement. I don't trust Wall Street to do anything except enrich itself at my expense. I trust gold. I trust silver. I trust physical assets in my possession that nobody can default on, nobody can mismanage, and nobody can steal through inflation. Now here's what should really open your eyes. While ordinary Americans are told to keep contributing to their 401k, to trust the system, to believe that their pension will be there, the people who actually understand finance are doing something very different. Central banks around the world are buying gold at the fastest pace in modern history. In 2022, central banks purchased 1,136 tons of gold, the highest annual total since 1967. In 2023, they bought another 1,137 tons. In 2024, they bought over 1,000 tons again. These aren't gold bugs or conspiracy theorists. These are the most sophisticated financial institutions in the world, with armies of analysts and economists. They see what's coming. They understand that the fiat currency system is failing, and they're positioning themselves with the one asset that has no counterparty risk. China has been accumulating gold for years, massively increasing its official holdings, while likely holding even more through state-owned banks off the official books. Russia has built its gold reserves to over 300 tons, specifically to protect against Western sanctions and dollar weaponization. Even Western central banks, who spent decades selling gold, have reversed course and started buying again. But it's not just central banks. Billionaires are moving into gold. Ray Dalio, founder of Bridgewater, the world's largest hedge fund, has been vocal about holding gold as protection against currency debasement. Stanley Druckenmiller, one of the most successful investors in history, has significant gold holdings. John Paulson, who made billions betting against the housing market in 2008, has massive positions in gold. These aren't dumb people. These are some of the smartest financial minds on the planet. And they're all doing the same thing. They're getting out of paper. They're getting out of promises. They're getting into gold. Meanwhile, what are pension funds doing? They're buying more stocks at all-time highs. They're buying bonds that lose value when inflation rises. They're investing in private equity funds that charge 2% annual fees plus 20% of profits while delivering mediocre returns. They're doing exactly the wrong thing, and your retirement is tied to their bad decisions. So what can you actually do about this? First, let's be clear about what you can't do. You can't fix Social Security. That's a political problem that would require Congress to act, and we both know how likely that is. You can't fix your employer's pension fund. Those decisions are made by fund managers and boards you'll never meet. You can't predict when the stock market will crash or when inflation will spike, but here's what you can do. You can stop relying entirely on systems you don't control and start building wealth that you actually own. Let me walk you through the Stat Guy strategy for protecting your retirement. Step 1, understand your exposure. Pull out your most recent statements. Look at your 401k. Look at any pension benefits you're entitled to. Look at your projected Social Security benefits. Now ask yourself, what happens if any of these fails to deliver what's promised? If your pension fund is underfunded, understand that you might receive less than projected. If your 401k is heavily invested in stocks, understand that a market crash could cut your balance in half. If you're counting on Social Security, understand that benefits might be reduced before you retire. This isn't pessimism. This is realism. Planning for the best while preparing for the worst. Step 2, diversify outside the system. Your 401k is inside the system. Your pension is inside the system. Your Social Security is inside the system. You need assets outside the system. Assets that don't depend on some fund manager's competence. Assets that don't depend on Congress keeping its promises. Assets that can't be inflated away by the Federal Reserve. Physical gold and silver are the ultimate outside the system assets. When you hold gold in your possession, you're not dependent on anyone. There's no counterparty, no fund manager, no government promise. Just real wealth that you actually own. Step 3, start stacking consistently. You don't need to convert your entire retirement to gold overnight. That's not practical for most people. Instead, start stacking consistently. Every month, take a portion of what you would normally save and convert it to physical metal. Maybe it's $100 a month, maybe it's $500, maybe it's more. The amount matters less than the consistency. Over time, you'll build a stack that provides real protection against pension failures, market crashes, and currency debasement. Step 4, learn the differences between types of metals. Not all gold and silver is equal. There are bullion bars, sovereign coins, numismatic coins, junk silver, and more. Each type has different premiums, different liquidity, and different considerations for storage and eventual sale. Understanding these differences is crucial for building an effective stack. I've made other videos on this, and I've also put together a free guide that covers all of this in detail. Step 5, secure storage. Once you start building a meaningful stack, you need to think about storage. Home safes, private vaults, allocated storage. There are options at every level. The key principle is, if you don't hold it, you don't own it. But that doesn't mean you need to keep everything under your mattress. It means you need to maintain control over your metals and not leave them with counterparties who could fail or freeze your access. Let me give you some numbers that put all of this in perspective. Scenario 1, you stay in the traditional system. Let's say you have $200,000 in your 401k invested in a standard 60-40 stock bond portfolio. You're 55 years old, planning to retire at 65. Assuming 6% annual returns, by retirement, you'd have about $358,000. Now let's factor in inflation. Even at the government's understated 3% rate, by the time you're 70, that $358,000 will only have the purchasing power of about $275,000 in today's dollars. But what if real inflation is higher? At 6% inflation, your purchasing power drops to about $200,000. At 8%, it drops to $160,000. And that's assuming no market crash. If we get a 50% market decline, like 2000, 2002, or 2008, 2009, your balance could be cut in half right when you need it most. Scenario 2, you stack gold alongside your retirement accounts. Let's say instead of putting all your savings into 401k, you divert $500 per month into physical gold. Over 10 years, that's $60,000 invested. If gold appreciates at just 8% annually, your stack would be worth about $90,000. But here's the key difference. That $90,000 is protected against inflation. Gold maintains purchasing power. If the dollar loses 50% of its value, your gold doesn't lose anything. In fact, measured in dollars, it doubles. And if there's a currency crisis, a pension collapse, or a banking freeze, your gold is still there, in your possession, accessible, tradable. Scenario 3, the pension fails. Now imagine your employer's pension fund is 50% funded, which is the reality for millions of Americans. You've been counting on $3,000 per month in retirement. But when the pension fails, you only receive 50%. That's $500 per month. Over a 25-year retirement, that's $450,000 in lost benefits. Could you have converted some of your working year savings into gold instead of trusting the pension fully? Could that gold have made up for the shortfall? This is the calculation millions of Americans are failing to make. They're trusting promises while ignoring protection. Don't be one of them. Let me be direct with you for a moment. I know this information is overwhelming. I know it's scary to think that the systems you've been trusting might fail. I know it's easier to just hope that everything works out. But hope is not a strategy. The pension crisis is real. The numbers don't lie. And pretending it doesn't exist won't protect you when the bills come due. Every single week, I hear from people who wish they had started stacking sooner. People who watched gold go from $1,500 to $2,000 to $2,500 to $3,000, always thinking they'd buy on the next dip, always waiting for the perfect moment. The perfect moment was yesterday. The second best moment is today. Because here's what's coming. The baby boomers will continue retiring at $10,000 per day. The pension funds will continue falling further behind. Inflation will continue eroding purchasing power, and at some point, the whole system will reach a breaking point. When that happens, there will be three groups of people. Group one, the insiders, the politicians, the billionaires, the central bankers. They'll be fine. They've already positioned themselves. They make the rules and can change them whenever they need to. Group two, the prepared, the people who saw the signs, the people who didn't rely entirely on promises, the people who built real wealth outside the system. They'll survive. Many will thrive. Group three, everyone else, the people who trusted the system completely, the people who ignored the warning signs, the people who hoped their pension would be there, hoped Social Security would be there, hoped their 401k wouldn't crash. These people will watch their retirements disappear. They'll spend their golden years struggling instead of enjoying the fruits of their labor. I want you in group two. That's why I make these videos. That's why I'm so passionate about this, because it's not too late. You still have time to prepare, but that window is closing. Now, I know I've thrown a lot of information at you today. Pension shortfalls, inflation math, historical collapses, gold performance numbers. If you're feeling overwhelmed, that's completely normal. Most people have never heard any of this because the mainstream media won't cover it. It doesn't fit their narrative. But here's the good news. You don't have to figure this out alone. I put together a comprehensive guide specifically for people who are worried about their retirement. It covers the different types of gold and silver, how to evaluate what you already have, common mistakes to avoid, and a step-by-step process for building a stack that actually protects you. It's completely free because I believe everyone deserves access to this information, not just the wealthy who can afford expensive financial advisors. You can download it right now by clicking the link in the description or scanning the QR code on your screen. It takes 2 seconds, and it might be the most important thing you do for your financial future this year. And if you're ready to take serious action, if you have seen the signs and you're ready to stop trusting promises and start building real protection, I want to help you do it right. Whether you're just getting started with your first ounce, or you're looking to convert a significant portion of your retirement savings into physical metal, there's a right way and a wrong way to do it. I've spent years learning this space. I've made expensive mistakes so you don't have to. And I'm here to share everything I've learned. Subscribe to this channel if you haven't already. Hit that notification bell so you don't miss any updates. The information in these videos could be the difference between a secure retirement and financial devastation. Drop a comment below. Tell me about your situation. Are you worried about your pension? Are you already stacking? What questions do you have? I read every single comment, and I respond to as many as I can. This isn't just a channel, it's a community of people who are waking up and taking control of their financial futures. Share this video with someone you care about, a family member who's counting on their pension, a friend who's trusting their 401k blindly, a coworker who has no idea what's coming. The more people who wake up, the better off we all are. The $12 trillion pension crisis isn't a future problem. It's a current reality that's getting worse every day. The same people who created this mess, the politicians, the fund managers, the financial engineers, they're not going to fix it. They're going to keep making promises they can't keep collecting their fees and salaries, and keep hoping they can retire before it all falls apart. That's their plan. What's yours? I know what my plan is. I stack. I protect myself. I build real wealth outside a system that's designed to fail. And every day, more people are waking up. More people are seeing through the lies. More people are taking control. The question is whether you'll be one of them or whether you will be left hoping that this time the promises will be kept. I know where I stand. Now it's your turn to decide. Thank you so much for being here today. I'm the Stack Guy, your trusted source for all things gold, silver, and honest money. Until next time, keep stacking.